Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and we are as close as we've ever been to 100 subs, so if you're watching this and you're not subscribed, go ahead and do that. I have no idea what happens next for Bitcoin, for the stock market. I imagine current momentum continues into Jackson Hole, we'll get to that in just a second, where markets get the next communication from its overlords. From there, we have non-farm payroll, consumer price index, and the Federal Open Market Committee. So if you didn't know, Jackson Hole is an annual symposium that allows an open discussion of economic issues, stock and currency issues facing the economies of the world. And the next one is due August 25th to August 27th. So I would imagine this is going to have an enormous impact. And then as Jordan points out, after that we've got non-farm payroll, CPI and FOMC in September. So there's likely a lot of volatility coming up starting around the 25th of August. There could be positives coming out of this Jackson Hole symposium. The Bank of England is already kind of laying the groundworks for this sort of pivot and coming to admit that a 2% target is just ludicrous. 4% may result in more stable monetary policy regime. So they're already talking about moving the goalposts. I would imagine it's only a matter of weeks, if that, before the US start to do the same. But I thought this was interesting that we're coming up to Jackson Hole and they're already talking about, the Bank of England at least, is already talking about moving the goalpost. So I wonder if something that comes out of Jackson Hole will be that the US is going to move its 2% target. Let's be honest as well, its 2% target is just simply unattainable for the US. Moving on to Bitcoin, the former president of the New York Stock Exchange has explained how Bitcoin is a trusted censorship resistant that'll only ever be 21 million. And he says that it will have to be part of a portfolio. And notice that this is on the mainstream, this is CNBC. So I'm just going to quickly play you this clip.
Did you talk to him before coming on, and what does he say about where's it going from here?
That was a pretty easy call. It was a pretty easy call because what's happened with Bitcoin, when Bitcoin was at 60,000, you had a lot of institutions on the sideline who were looking and saying, boy, we'd like to invest, we'd like to allocate 1, 2, 3% of our portfolios, pension funds, for example. But at 60,000, it feels toppy, there's some mania, but they've done the diligence, they've met with their investment committees. And so as it went down to 17,000, it wasn't a shock to me that you saw some of those institutions step in for the very first time, buy Bitcoin, store it in their portfolio. So I knew there was a buyer.
But interesting that those institutional buyers stepped in when it was showing its volatility. You would think that the opposite would be true, that they would want to stay away, unless you think now that this is such a critical asset class that no one can afford not to be in it.
Yeah, well, it was a moment of capitulation. So if we could see all the books and records, I think it would be a combination of some really smart Bitcoin whales that have been in it for 10 years, and then fairly quickly some of those institutions stepping in. That's exactly what's happened. I mean, look, in crypto, yes, Bitcoin's up 40%. It doesn't mean it's going to go up another 40%. But in crypto, there's Bitcoin, and then there's literally everything else. Bitcoin is trusted. It's largely censorship resistant. There will only and ever be 21 million Bitcoins. It will have to be a component in a portfolio of broad portfolios, like a pension fund, maybe just to a small extent, but it will have to be there. And then there are all other cryptocurrencies. Ethereum's in a special class, of course, stablecoins, and then everything else looks like a speculative stock. Maybe if you invest in it, you make money. Maybe you lose all of your money.
So there you have it. They are telling us, they are explaining to the masses that Bitcoin is in a class of its own and that institutions have come in and bought the bottom. Of course, we've seen this with BlackRock. And it's quite possible that we're about to undergo one of these exponential functions that allows Bitcoin to recover like nobody ever thinks possible. So you can see here that this would look absolutely ridiculous when no one really thinks this is possible at the moment. But with institutions having stepped in and the Saudis having come into this, the sovereign wealth funds deploying capital. Miles here points out you may have heard of a Bitcoin bull run, but have you ever heard of a Bitcoin camel run? Prepare yourself. I don't think people truly understand the amount of money that could flow into this space, and the market cap is only $500 billion. It's less than $500 billion at the moment. It takes nothing to propel the price into the six figures. It really does take relatively no capital at all. When you're talking about pension funds, BlackRock has 10 trillion under management, and that's what they tell you. The real number is 4 or 5 times that. Plan B points out that Bitcoin's moving away from its realized price in the light blue, so you can see here. Does this mean that we can't come down and form a bigger base or a double bottom? No, but it also doesn't mean that we can't just go straight up in a V. Of course, a lot of that depends on Jackson Hole. But Plan B also pointed out that max pain equals never below 20k again. The majority of people said we will see 20k. A lot of people, and I've showed this in prior videos, have bids stacked below the lows, waiting to get in sub 17k or sub 17.5k. And so perhaps that never happens. The last time we saw bids stacked like that was in the 2020 March crash. And those bids but sub 3k never got filled. Raoul Paul chimed in and said, "Hi mate, I've seen the same result in nearly all surveys. Twitter, banks, even LinkedIn, etc. Both in equities and crypto, 65 to 75% bears in sentiment, and with the same number roughly actually being underweight and expecting a new low. They're waiting to buy a dip that might never come. I've seen this dozens of times in my career when people are sat on the side. People are texting me saying, I'll buy later, it's just too expensive right now. I had this all the way through the last run up where people were saying 5k was too expensive, I'm waiting for 4k, or 7k is too expensive, I'm waiting for 5k. And some of these numbers just never showed up again. Bitcoin people, including myself, won't be able to shut up about centralizing impact of POS once the merge goes live, and it won't be hypothetical anymore. Good luck, ETH maxis. POS is not a positive for Ethereum, in my opinion. And since the majority of ETH nodes are run on Amazon Web Service and Google, how long until the US government pressures them to only run OFAC compliant ETH nodes? OFAC, of course, being the Office of Foreign Asset Control. And this is actually a systemic risk to ETH, isn't it? Now, I'm not trying to FUD this coin, and we're going to get to the good stuff in a minute, but Ethereum people keep flip-flopping and changing the rules. One day proof of work is okay, and the next day it destroys the environment. There's no comment when Bitcoiners get arrested for using mixers, but there's absolute shock when an ETH head does. Ethereum's NUPOR, its net unrealized profit and loss, has come into capitulation and out of capitulation, and now we are in the hope and fear in the orange, as you can see here. This is not something that normally leads to lower prices. And if you've been watching the channel, you'll know I've been publicly long since all the way back here. I've been holding this long. As soon as we lose this upward sloping trend line, I will be out of this position. I'm not willing to hold a breakdown, because if it breaks down from this trend line, then it could go significantly lower. But all the while we're above this trend line, if we can get a bounce here, then we'll continue to push this trade. And no matter what happens, whether I'm out or we continue to push, I'll be lining up this top line here to add to a long or to re-enter if I'm out. Because if we can break this line, then we're probably going an awful lot higher. So I'm not trying to FUD Ethereum. You know, I'm long from a trade. I've been publicly long. But it's important to point out that there is systemic risk. I pointed this out in a recent video. People have been locked out of using the Aave front end because somebody randomly sent them 0.1 ETH that had been tornado cached. You know, this is systemic risk. What we're also seeing that not many people are talking about is there's a way to cause a liquidation cascade here. If you identify all major loans on the Aave front end and plan for a possible liquidation cascade, you send ETH from Tornado Cash to all wallets with major loans, let Aave block all the wallets so they can't trade, short ETH, and initiate an ETH dump. Then watch the liquidation cascade, and nobody can do anything because they would have been locked out. This is systemic risk for ETH, which is why I'm happy to push this trade only until we break down. And again, I'll be happy to re-enter on a trendline break, but it's important to respect risk. This is not a risk-free trade, and you should not be just expecting, like I've seen a lot of people, that we're just going to shoot straight up. One last thing to point out, just something to be aware of with Ethereum. Proof of work diehards plan to fork and mine their own Ethereum chain after the merge. It won't be easy to operate in a proof of stupidity world. And so what does this mean? Well, Ethereum has already kind of undergone this before. We had the current ETH token, as you see here, as we all know and love. This was actually forked from the Ethereum Classic chain. And so it's quite possible that after this merge, we'll get another fork, and there'll be ETH 2.0, which runs on proof of stupidity, and then there'll be the proof of work diehards that are still mining their own chain. Now, will it be as secure? No, it will be more susceptible to 51% attacks. However, this is a problem that you don't really see the Ethereum Foundation or Vitalik talking about openly, right? And this is a real world risk. So just something to be aware of. This is why I'm going to respect this trend line. This is why I'm going to be respecting risk. Not to say I hate ETH, but I am losing my passion for it, shall we say. Moving on to the great reset news. The future is bright. I'm not going to read all of these. You can pause the video here and go through them if you want to see. 2 years ago, people laughed and considered this nonsense. But who's laughing now, right? Crickets contain more protein than beef without any of the environmental damage. And this is coming from one of the top 3 grains producers in Canada. So are you going to eat the bugs? Do you have a problem with eating bugs? Let me know in the comments. I'll be interested to read them. Germany has been in trouble of late and is incredibly dependent on Russia for energy. And since then, since this has become sort of common knowledge in Germany, Google searches for firewood in Germany spiking. And this made me think, because the UK plans blackouts in January as part of this emergency energy plan. And this made me wonder, does that mean that we're going to see a rise in firewood searches in the UK? Quite possibly. You can see we got a spike here deep into the C19 era, right in the middle of the pandemic. And since then, we're not quite back up at those levels, but we are apparently starting to rise. So something to watch out for. And then lastly, in terms of the reset, we've got protests in Argentina after the country's central bank raised its main rate of interest to 69.5% in an attempt to combat inflation rates above 70%. The government is also cutting subsidies for energy and other social benefits. And you can see here, this is a massive protest, as you would expect. How much would your mortgage be if it went up to 70% rates? So yeah, not good at all. Just before we get into the charts, I want to point out a couple of things. Corporate insiders in the consumer discretionary sector are still stacking. Once this metric rolls over, the real fun begins. So you can see once this metric rolls over, it usually leads to big upside. And at the same time, the high yield McKellen summation, last time it went from negative 1500 to zero, like it's just done, negative 1500 to zero. Last time it did that, high yield bonds had a massive rally taking the stock market with it. But there is something to point out. We did first put in this sort of double bottom, and I do wonder if that is coming. So let's take a look at some charts. The dollar is kind of broken out of this first line of resistance, but it's into this second line, so we'll keep an eye on that. I'm not too worried about the dollar. I would say this is likely topped, and even if we do get a breakout, I think it will fail before it makes a new high. So could this put pressure on markets near term? Yes, but will it? Likely not, in my opinion. The S&P 500, I've checked the futures, they're off about 0.5% at the moment, but really that is nothing. If I take 0.5% down here, see that's 0.6 there, so it's hardly noticeable at all really. Long and strong continue to push. Similarly with ETH, a breakdown of this trend line, and I think it's time to start respecting risk and locking in profits, but I wouldn't be surprised to see this trend up right into Jackson Hole around the 25th. So I think there could be another 10 sessions left in this perhaps, roughly. The Nasdaq is the exact same story. Lose this trend line and I'm out, but I wouldn't be surprised to see this trending up into the 25th of August. The VIX gapped up a little bit, but still underneath this resistance. Can we get all the way down here, or am I going to end up taking this trade here? I don't know yet, but likely I would think this is going to come somewhere around the 25th. I'll put that like here. Yeah, I think this is going to come somewhere around the 25th. So lining that up, but open to taking the trade as and when we get a breakdown of one of these trend lines in the equities. Continuing to push this trade, same story, break of this trend line and I'm out, but while we're above it, that's fine. I've got a new stock set up to show you here, real. So you've probably seen this before if you've been watching the channel. We've had the breakout, retest, resumption, and now consolidation under a horizontal. So this is along from me as we break out here, something like this. So I'll be keeping my eye on that. I like the look of this. Oil, this is why we don't take on positions on a Friday. You can see the weekend risk has come back here. So you could argue perhaps we're getting a retest and resumption off, in which case this does become a long. But for now, I don't think we're seeing that, and I think there's going to be more downside. You could also be stricter on this trend line and draw it like that, in which case we've had a perfect rejection. So it pays not to take on weekend risk. It pays to come back on Monday and see how things are working out, and so that's great. I'm glad I didn't jump in on this little what appears to be a bull trap, although I am open to flipping long here if the charts tell me to do so. Gold, not sweating pullbacks, as I've been saying over and over again. Could I see a big pullback here? Yes, I could, but like I said, I'm not really sweating pullbacks. I'm going to wait for a full cycle to play out and a move higher, and then we can talk about taking risk off and moving stops up. For me, adding on dips if I see the opportunity to do so, and the same is true of silver. The exact same is true of silver. Still pushing my minor position. I plan to push this for as long as possible, so I'll continue to update on that. Bitcoin is still kind of just waddling up, isn't it? I think there's plenty of time. I've got this line here which denotes the 60-day cycle low from our entry. Let me try and get a... So you can see there, 60 days. So I expect to drop into this 60-day cycle low. In theory, the top can come at any point, but I'll be using this trend line, this upward sloping blue trend line, as my exit. I've already sort of covered ETH long and strong until we break this trend line. So that's that. MATIC was over $1 briefly, but look at this, kind of weak, isn't it? This is still my exit, this upward sloping trend line here. So I'll continue to push all the time we're above that, but we lose this line, and that's difficult for me to justify not taking the profit on MATIC. And so that's it from me. I really think we have got a little bit more rally left in this ball, although it does seem stretched or overbought in the near term. If you're not subscribed and you found value here today, I'd really appreciate it if you could drop a subscribe, help me get to 100. If you're subscribed already, drop a like on the video, I'd really appreciate that. And let me know if there's anything you want to see from me. Until tomorrow, I'm your boy Camel. All the best from me. Take care. Cheers. Bye.